All right, everybody. We're going to get started with Facebook Live in just a few moments. We got some really interesting things to talk about this morning. I'm going to make it fairly brief because tomorrow night I will be doing my full-length video, my full program on the Hump Day Market Update. That's tomorrow night at 7 p.m. So just, we'll have a lot to go over that. By the way, I have a podcast, all kinds of good stuff we're going to talk about in just a few moments. Let's get everybody a chance to log on to Facebook Live. Okay, let me turn my bringer off here. All right, everybody, you guys ready to go? Well, good morning, everybody. And today is Tuesday, April 21st. I'm Lee Seiler, also known as the Stock Doctor, and you can check out my website at stockdr.com. That's stockdoctor.com. A lot of great information on there. And thanks for joining me this morning. And for those of you watching the video later, not live, I really appreciate that. A little housekeeping first. Keep in mind, tomorrow evening at 7 p.m., I'll be doing my full-length program. Starts at 7 o'clock. We run about 30 minutes-ish. So you can see the ticker down on the bottom. You can call in your questions. You can start now if you want, and we'll take your questions for tomorrow night. Or you can email Nikki at stockdr.com because we do have a lot of questions, and we'll go over those tomorrow. And we also have a podcast now. It's the Stock Doctor's Prescription. Can be found on Spotify, as well as some others. But it's going to take a few times before it gets on Apple. But it is on Spotify now, the Stock Doctor's Prescription, which is a little bit different format. It's really my whole staff, all the advisors together. We're just talking and bouncing ideas off each other. And it's really catering towards a part of the program, towards the millennials, believe it or not. I know I make fun of them quite often. Deservedly so. So anyway, let's get this program going. Thanks for joining again. Wow. Yesterday at my 33 year, which by the way, I'll be starting my 33rd year in this business in May. So completing my 32nd year. So starting year 33. And in all of my years, and there's been some strange stuff, and certainly the pandemic is really strange. It's something that we haven't dealt with, but we are going to have some, just crazy things. And we're going to talk about tomorrow, talk about GDP. Tomorrow night, we'll talk about what's going on earnings-wise. I'm really not going to dedicate that this morning. What I want to talk about is oil. This is big time in the news. Now, we know oil's been under pressure because of supply demand. There's no demand. There are people out there that are working from home or not working. You can't go out and drive around. So there are people out there who haven't filled up their tank of gas in 4 weeks or longer. I know that, gas, I've got 4 cars and a motorcycle, and I filled up my motorcycle more than anything else lately. So it has really been an issue. So that's why we've seen a plummet in oil prices and subsequently gas, which is the lowest price I've seen since I was in high school, I think. I don't know. And I had a 1970 Monte Carlo that would get 8 miles a gallon. So, But here's the weird thing. We've seen oil plummet, but we've never seen oil go to negative prices. And I'm going to say not oil, the futures contract, a contract to buy oil, which today is the expiration at 2 p.m. this afternoon for the May contract. So what happens is you're literally buying futures contracts so that oil, you're guessing basically what the price of oil is going to be. And literally when you buy a futures contract, you are physically getting barrels of oil delivered to you. You are buying the actual commodity. So what has happened? There's a glut of oil. Of course, last week there was the biggest cut in production in the history between the Saudis and the Russians. They're cutting 9.7 million barrels of oil per day as far as cut production. We thought that would help a little bit. But here's what has happened. Oil tankers, storage facilities, we are loaded with oil. We have a glut of oil. There's no place to store oil. So what has happened in the futures contracts is the folks that are selling the oil saying, listen, I'll tell you what, we're going to pay you. Think about this. They're paying, if you could store oil, they would have paid you at some point yesterday $37 a barrel to take a barrel of oil and store it. Hell, I got a 3.5 car garage. I could probably store 500 barrels in there. It's not that simple. My point is, though, literally, they have to deliver oil, and there is no place to store it. So they have to get rid of oil, and nobody was buying because nobody has a place to put it. So they were paying, the owners of the oil, the sellers, were paying futures contract buyers to take the oil off their hands because they figure, A, they have no storage, and it costs a lot more to store and or totally shut down production. So it is the strangest thing I've ever seen. And right now, it has rallied up a little bit. Today's contract, again, it expires. So you're buying today, and it was at negative $8 just now. So therefore, what that means is you can buy a barrel of oil. If I'm a buyer, hey, I need oil. They're going to pay me $8 to take a barrel of oil off their hands. Does that mean we're going to have negative prices at the pump? No, because there's still refining costs. But we're certainly going to see lower prices probably. I mean, there's talk that we'll see $1.50 a share in regular unleaded here in the short term. So that is just craziness, all right? Now, we saw the market take a hit yesterday on that news, and I'm going to show you a chart on the markets. But, all right, let's go to there. This is, again, I like to show you the Dow Jones, but the Dow was down yesterday. Let me give you the exact numbers because I want you guys. Dow was down 599 points, 2.4%. The S&P was down about 1.79% at 2823. The NASDAQ was also down about 1%. NASDAQ's been holding up fairly well. But let's take a look at the chart. I'm going to show you something really interesting. Remember I talked about the bottoming process. And again, I still believe this day right here, March 23rd, that's the low. I don't believe we'll violate that again. That's my opinion, not the opinion of anybody else, all right? Well, maybe some other people, but I'm starting to hear that out there now. But the market has rallied. It tried that, and I told you, we need that second leg. We need a W base. We need some kind of rounded bottom. We need a bottom. A bottom takes time, weeks, months to form bottoms, especially in the market. So what has happened is the market has rallied from those March 23rd lows, but it stopped going up right here where that red line is. That red line is the 50-day moving average. The 50-day moving average can be support, and support means that it's a place in a chart or a price in the stock where it just doesn't seem to go any lower. There are buyers out there. They're supporting the stock or the index. They buy at those levels. But it also works the opposite way. So what was support, I'm going to give you a great example. The red line was support. See, it'd pull back to the red line. See, it would pull back, but kind of maybe get below it, but get back up, pull around it, pull below, pull below, pull below, pull below. Finally, it violated the 50-day moving average and went straight down. So what was support now reverses and becomes resistance. Resistance is the exact opposite of support. It's a price in the stock or an index where when it hits that level, sellers come in and say, you know what, I think it's fairly valued. I don't want to own it here. Boom, 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 they sell it. So that is what we're seeing now. You're seeing resistance at the 50-day moving average. That's enough to knock it down, and maybe we'll get that second leg. And what I thought would come down here, because we've had an extended rally, I think we're probably going to get back to these levels. And I'm talking on the Dow, 21,000, maybe somewhere around between 21 and 22,000. I know it's a 5% wide range, but we did close yesterday at 23,650. So to see 1,000 points shaved off the Dow is not a big deal right now. So I do believe that, I've been saying the bottom takes time. We haven't bottomed out yet, but there's opportunity. So it's funny because I had some clients ask me about oil. So, I'm just going to tell you, and I'm not, these are not recommendations, all right? I don't want anybody to take this and run with it, but there are some people that could assume some risk, and there is risk in the oil sector. I wouldn't buy individual oil stocks, I think, because I don't know which ones are going bankrupt. There are going to be bankruptcies. This whole coronavirus pandemic is going to cause bankruptcies in retailers, leisure, which would be restaurants, hotels. It's going to cause bankruptcies in the energy sector as well. So we don't know which ones are going bankrupt. And the ones that are paying dividends, you're going to see, we're already starting to see dividends being cut. So you don't buy something because it's got an enormous dividend. It's probably not safe. So that being said, I have been nibbling at a fund. I'm not going to give you the name of the fund, but it owns about 40 energy companies. And I trust that the money managers are really screening their companies they own extremely well, because they like, in this strategy they use is called AlphaDex. They like to, let's say there's 100 stocks, they want to chop off the bottom 25%. So they're looking for the companies with the best balance sheets, the best cash flow, the companies that can withstand some bad times. Here's the problem, is that no CEO or CFO in the country planned for this, because it's unprecedented. I mean, we all that own businesses have businesses, small business guys. Hey, I'm talking to you specifically. The big businesses, I don't care. They're gonna make it or not make it. It's not my problem. I care about the small business. So the small business guys, you always plan, hey, cut costs here because business may be slowing down or things are changing. That's great. But how do you plan for zero revenue? Zero. There are businesses out here locally in the Orlando area, which just makes me sick, and I feel horrible about it, that have bupkis. They got nothing coming in. And hopefully they are getting some money with the PPP and the CARES Act, but that doesn't seem to have happened. It looks like the big companies are getting it. Ruth's Chris got $10 million, and Shake Shack, which gave it back, or is giving it back. I really appreciate that. I mean, they're public companies. All they have to do is sell some stock. They'll be okay. So anyway, that's what's happening in oil. So it doesn't mean it. Look, it does. It's physical barrels of oil. It expires today. The June contracts are trading at 20 and change. So we'll see what happens. But it's certainly the pressure's on oil. I do believe that there is an opportunity there, but you need to get a hold of me. I'm not going to blindly give, because this is a situation we don't know what's going to happen here. But Warren Buffett always said, one of the greatest investors of all time, he always said, buy when there's blood in the streets. Okay, I love the contrarian theories, as opposed to conspiracy theories. No, but I do love contrarian theories, because in my experience, the masses are usually wrong. On March 23rd, all these yahoos on CNBC said, I wouldn't touch it, I wouldn't sell, I'm selling, I'm getting out. Well, because you're a moron. You don't sell on a day like that. Okay, why? Weak hands create opportunities for strong hands. All right, if you're a weak shareholder and you're selling at the lows, it's creating opportunity, because every share you sell, guess what? Somebody smart is buying. And I say, look, I'm not ragging you if you sold at the low. That's what happens. I mean, that's why you need an advisor. We talk people off the ledge. I tell people all the time, and my advisors, we don't get paid, and I'm a fee-based guy. So, you know what? We participate with you. We want your accounts to go up because we participate. I'm not working on commissions. I'm working on fees. So our objective is only to do what's in your best interest. We're a fiduciary. We have fiduciary responsibility to do what's in your best interest, in your risk profile, and your objectives. So we don't want you to sell at the lows, because we believe that that's a mistake. And some people need to be talked off the ledge. And luckily, my clients are smart, and I don't take all of that credit. We do try to educate, but we deal with very smart, astute people, and I really appreciate you guys. Although we do have some people that do need some coaching, and that's again, that's what we do. That's what we're here for. If you don't have experience owning investments or stocks, we're perfect for that, because we can help you. And anyway, give us a call at the office. See the bottom number there. And if you want to talk about energy sector and where the opportunity is, we can discuss that, understanding that things can happen. We don't know, but I think that the pendulum has swung all the way, like on March 23rd in energy. I'm not picking individual stocks in that sector. I just don't feel good about it. But I will own a basket of them, because some of them are going to go out of business. So anyway, I appreciate you guys joining me today. Check out the website, stockdr.com. Spotify, the Stock Doctor's Prescription. We had our first podcast posted last week on Friday. So here's what's going to happen. Tuesday morning, I'm going to do the short form. Wednesday, tomorrow night, 7 o'clock, long form programming. Call for your questions or email your questions in. Friday, we'll be posting our podcast. So we're doing a lot of things to help investors out there. And hopefully, in turn, we'll get some clients out of it. That's basically what it is. All right. Guys, I really appreciate it. Hope everybody has a great day. The markets are going to open lower today. We had a bad day yesterday. They are going to open lower today. But again, that's part of the process. Remember, I want the market to pull back a little bit to give those folks that couldn't get in more opportunity. So, as always, I really appreciate you guys. You guys are awesome. And have a fantastic day. And I will see you tomorrow night at 7 o'clock.